As we close out Q4 2024, global investment faces a series of warnings and challenges that could shape the economic landscape in the coming years. The OECD has raised concerns about the increasing fragmentation of global trade, emphasizing that rising trade barriers and geopolitical tensions may slow economic growth. The organization forecasts global GDP growth to decelerate to 3.1% in 2025 and 3% in 2026, highlighting the long-term risks of economic nationalism and protectionist policies. Ollie Dibach, CEO of Janus Henderson, has also expressed concern over geopolitical volatility and the potential impact of trade tariffs proposed by President Donald Trump on China, Canada, and Mexico. He warns that we may be entering a new era of permanently higher interest rates, posing a challenge for young investors who have never navigated such conditions before. Meanwhile, Joe Tsai, chairman of Alibaba, has issued a cautionary note on the AI investment boom, suggesting that the massive capital influx into AI infrastructure, particularly data centers, could be forming a speculative bubble. His remarks sent Alibaba's stock down 3.8% in Hong Kong, with other Chinese tech stocks following suit. Overall, global financial leaders are urging caution, pointing to trade fragmentation, geopolitical risks, and potential investment bubbles in technology as key challenges for investors heading into 2025 and beyond. As we enter the fourth quarter of 2024, global investment trends are being shaped by a mix of economic shifts, geopolitical tensions, and sector-specific developments. Analysts from major financial institutions provide mixed yet insightful projections for investors navigating these uncertain times. Barclays Investment Bank forecasts global economic growth of 2.9% in 2025, slightly lower than previous expectations. The slowdown is attributed to persistent inflationary pressures, central bank policies, and ongoing geopolitical uncertainties affecting key markets. Goldman Sachs highlights continued dominance in the US stock market, driven by high investment in research and development and robust corporate earnings. The Federal Reserve's stance on interest rates will play a crucial role in shaping equity market performance. The European market is showing signs of recovery, supported by increased investor confidence and economic stimulus measures. Analysts at Russell Investments project US economic growth around 2% in 2025, anticipating that cooling inflation will lead the Federal Reserve to ease interest rates. They highlight factors such as trade policies, immigration reforms, and tax cuts as influential to this growth trajectory. Fisher Investments anticipates a continuation of strong global market performance into 2025, with European markets and value stocks taking the lead. They suggest that the trends observed in 2024 are likely to persist, offering opportunities for investors in these sectors. These insights reflect a cautious yet opportunistic stance among global investment leaders, emphasizing the importance of strategic planning and adaptability in navigating the evolving economic landscape. In Q4, the Federal Reserve implemented two 0.25% interest rate cuts in November and December, totaling a 0.5% reduction. These moves were widely anticipated and signaled a shift in the Fed's outlook for 2025, indicating a more cautious approach to further rate adjustments. Despite a positive market performance, analysts express caution due to ongoing geopolitical tensions and an uncertain inflation outlook, which contributed to market volatility in Q4.